unlock business hacks and lessons in Bruce Billy's 5-minute management tips with business leaders. Join Irfan and the various respected business leaders in different industries.
Hey guys, it's Irfan Jaffrey with 5-minute management lessons from entrepreneurs. This is where I interview folks that I get to work with, who have the pleasure of working with, that I respect and admire, that are doing incredible things. Today, I've got Irwin Boris out of the East Coast. I want to say New York. Is that right, Irwin?
New Jersey, close enough.
New Jersey. Well, Irwin, thanks for joining us today. I really appreciate it, your time, and I think a lot of what you do is very intriguing, and I think you've got a really interesting story. So I'd love to ask you a few questions, but before I do that, can you maybe just give us a little bit of background on what you do and how you started?
No, sure, not a problem. We are in real estate investment and asset management, mostly in the industrial and flex space. We prefer multi-tenant properties over single tenant for the obvious reason you could spread the risk. I've been doing this for 30 years. I got started as an auditor. After I took the CPA exam, I worked on a lot of real estate clients, and I got to see how the numbers worked. And then I was given the opportunity by the Lefrak family to see the operations side, and they stuck me in, Lefrak City. It's 4,800 apartments, and I had to work with union crew and federal and state agencies and go to landlord-tenant court and see how hard it was to collect your rent, especially when things got tough for tenants. And over the years, I've worked for lending institutions, doing structured loans, raising equity, construction lending, as well as originating billions of dollars in Freddie Mac, Fannie Mae, and FHA multifamily loans. So I have a diverse background in real estate, but what I found is that I really like the industrial and flex space, probably mostly the best, because it's always full.
Let's talk a little bit about the types of clients that you look for. Talk to me about your ideal client.
We have, it started as all our own money. And then it was, people used to say, yo, you're doing so well, how come you don't invite us into the deals with you? So it became sort of like a country club, friends and family. And then the word spread, my brother, my cousin, my uncle. And then over the years, as the deals got larger, we had a great, full track record of, full season track record with full, mature deals that we were able to do deals with institutional equity. And institutional equity, comes in and out of the market. Sometimes, being the 10-ton gorilla, they want too many pounds of flesh. And so a lot of times we look to partner with other family offices who want more exposure to real estate, but don't really have the operations platform. Doctors who know that they can't practice medicine forever because eventually your hands go, your eyesight goes, God forbid you get injured or disabled, that you'd still like to have, a good, steady, passive income cash flow that provides the tax benefits of what's taxable income. So we have a lot of high net worth. We have one deal where they have two pieces of, and they're in there. I know them for 20 years. I was one of their lenders. It happens to be another real estate family, but they're not in the industrial space. They've done some deals with us, and then we're happy to structure things that are very tax advantageous to other investors. We've done deals with 8, 10, 12, and 15 TICs, tenant in common entities, which is good for someone who wants the ability to continually exchange their money for tax purposes and not be subject to paying income taxes, where most of these syndications are all done on the partnership basis. And then when the deal is sold, it's okay, go pay your taxes, you're on your own. So if you're a large enough investor or you have an exchange, and we get these calls all the time, what are we capitalizing now that we have room for another $2 or $3 or $4 million for, and we give them a tick?
Let's sort of break down to folks who might not understand what the client experience looks like. So let's say I'm an ideal client for you and we're introduced through a friend. Walk me through sort of step by step in layman's terms, what happens?
Well, the customer experience, we're fully transparent. Unlike other people where they give you a glossy book, and a bunch of numbers, I'll send you a live model. If and I'll walk you through the assumptions, make all the changes you want. I know from my institutional experience, they want to know what your assumptions are. They want a live model. They want to be able to, see what the worst case scenario is. And we don't have a problem doing that because, it's our money alongside the investors. It's not like it's a fund or a syndicated deal where they have almost nothing of their own skin in the deal. For us, it's, if we have 20% of the deal, it's 8% or 15, whatever it is, it's real money. And so we're going to protect your money as if we're protecting our own money, because it's all basically, we're responsible, we're fiduciaries. We send out financial statements every month, complete financial statements, balance sheet, cash flow, P&L, general ledger report, copies of the bank statements. You get it all.
Give me an example of your biggest business challenge and how you overcame it.
One of the biggest challenges is getting control of the deal. You can't raise equity before you have the deal under control. You can't really shop for financing until you have a good feel for control. And that's really the hardest thing to do, is get control of the deal, which is why sometimes when you get control of a deal and after you close it and you've held it 3 or 4 or 5 years and people make very attractive offers to sell, and we talk with all our investors, and the feedback usually is, well, what else do you have that can produce that kind of cash flow? And so we end up holding them for a lot longer, but it's fine. We structure for that.
What are your goals for the rest of this year and then going into next year?
I would say this year is starting off with a lot of interesting opportunities. So the goal here is to try and close, 4 to 5 transactions at least. It also depends on how much equity we can find. Some guys are out there not investing. Some people are actively looking for a deal to put their money into, and so we speak with a lot of investors. I'm finding a lot of alternative asset managers with real estate allocations, and we're just trying to figure out if there's some synergy between us. And then it's about finding the right size deal. Ideally, I would love to find some programmatic investors that want to work on an aggregation strategy, because we assembled 2.5 million square feet of smaller properties years ago, and we got tremendous cap rate compression on the exit. It was a really wild exit with a tremendous profit, and that led us to 7 exchange transactions that we had to do. So we were really busy all the way towards the tail end of COVID. For about 15 months, we did about $500 million of transactions.
Oh my gosh. Okay. And the bulk of your clients are word of mouth.
Yeah, through word of mouth. There were 5 institutional deals that we did with 2 different institutions, 3 with one, 2 with another. And just by being out in the market, dealing with some of their investors, because some operate funds, and dealing with some of our existing investors who brought others in, it was very busy.
Wow. Anyone who might be thinking, hey, I should reach out to Irwin and talk about investing in commercial real estate, what advice would you have for them?
No, it's if you have an interest and you like the industrial flex space, and you're looking for a deal that's ideally half the returns cash flow, the half is through appreciation, so you're getting money off the table on an annual basis. I'm easily searchable on Google. You'll find an email address, a cell phone number. I'm on LinkedIn, I'm on Instagram, I'm on Facebook. I get inquiries all the time. Just be serious sounding in your inquiry. I find that even after I speak at family office conferences, which I do several times a year, I get a lot of follow-up people that have questions about real estate in general, that they never thought about industrial, or what are the returns, or can I contrast them to other real estate food groups. We're happy to do so. It's about educating people. I'm not the smartest guy in the room, and I'd rather tell people I've been very lucky than tell them I'm very smart, because there's always going to be someone who's seriously smarter. But in this business, you sort of can calculate certain things, but a lot of it is luck.
I think you're certainly a very humble guy. You've certainly done really well. I've got a million questions for you, and I think we're probably going to have to have a part 2 or a part 3.
Oh, that's fine.
For you to really just break some of these things down. I think it's fascinating what you do. It's so different from my world and what I do. So I get to sort of live vicariously through hearing about these deals. So, ladies and gentlemen, Irwin Boris with Paycar Capital. Irwin, listen, thank you so much. Always a pleasure. Thanks.
My pleasure. Thank you so much for your time this morning.
Awesome.
Thank you for watching. Did you enjoy today's episode? Don't forget to subscribe so you'll be notified with our next one.